One major thing I want to impress on people is just get ahead of the tax and finances. I see a lot of people that do versus the ones that don't. It makes a world of a difference. So the more ahead you are, is the better you're going to be in business. If you fall behind on taxes, that's how businesses go out of business.
Welcome to Dollars and Cents, the series where real financial pros share the stories and strategies that help small business owners like you shield your profits. My guest is Julian Joppy, an enrolled agent. That means that the IRS has authorized him to represent taxpayers at any level. He's the founder of BizTax Advisory and BizTax Playbook. He's been working in tax and accounting for over 11 years, and he is a genuinely passionate advocate for small business owners. What's rare in his field is that he speaks in plain, understandable language. In this conversation, Julian said something that stopped me in my tracks. He called tax season the annual report card, the moment when business owners find out everything they did wrong all year, and he's made it his mission to change that model entirely. Julian gave genuinely practical, plain language tax advice, the kind your tax pro is probably thinking, but not always saying out loud. Let's get to it.
Real world stories and financial insights for every small business owner. Welcome to Dollars and Cents.
It looks like you've done a lot of different kinds of things along the way. So give us a snapshot of your background.
Sure. So went to Penn State in Pennsylvania, went for business and accounting. And when I graduated, I went into tax after doing an audit internship, realized that was not for me, gave the tax side a try, and I've been in it for the last 11 plus years now. I have worked for CPA, EA firms, financial planning, financial wealth management companies over the years. I worked in Florida at a CPA firm for 2.5 years. Then I did a couple contract jobs when I started my own business in 2019. I decided to leave the CPA world and go get my enrolled agent license and started my own business at that point. And I've been going ahead and running my own business since 2019. So now I'm in my third venture now with BizTax Playbook.
I saw another interview with you where you talked a little bit about getting started in 2019 and that you started virtually before it
Mhm.
was a thing.
Yes.
And then it paid off for you in 2020, didn't it?
It did. So I started a virtual tax company in 2019. People used to always ask, where's your office? And I didn't have one. So it was very strange conversations. I didn't get many clients in the very beginning, but as soon as the pandemic hit, everyone was like, can you work from home? And I'm like, I sure can. I've been for a year. I was one of the people that benefited from the unfortunate pandemic in that instance. When I was already working from home, already used to it. Everyone else was getting thrown off with families and kids and being at home all day. That was a blessing, just being in the right place, right time, a little bit of luck as it always takes in business.
Yeah, I would say that was providential. That was just amazing that you were set up, ready to go, but you had gotten it figured out before it was a thing.
Correct. Yeah, that was definitely a great timing. I try to stay ahead of the curve now. That's why I've revamped into advisory. I did that 2 years ago. I know everyone's shifting heavily into the planning advisory world now. Wanted to get ahead of that curve as well, to be able to offer advisory, to be able to lead the charge and how things should look. And then I started leading it to build software and all the other fun things that I do now.
What is an EA? That meant something to me, but I suspect to most people they would say enrolled agent. What? What really does that mean?
Great question. As much as it's grown since 2019, it's still widely unknown, crazy enough. An enrolled agent is a tax professional on tax certification. So you license through the IRS exam and you become an enrolled agent. You can do the same thing as a CPA in all things tax. And also you can perform other accounting duties, bookkeeping, payroll, sales tax. It is a tax-centric license, but you have all the availability to do different things. And it's really based on your experience more than the license itself, to be honest. But you cannot certify financials like a CPA can. So you cannot offer signed financials, audit, reviews, compilations. None of those can be done unless you have a CPA license. I will give CPAs have a little bit more complexity into the level of education and studying they've done. So they're really good for certain niche areas that EAs are more geared away from, generally, not saying all of them.
You pointed out something really good. I forgot about the certified financials. When would a business owner need certified financials? Is that a regular thing?
No, that's generally when they're trying to get maybe potentially government funding at a high level. They need to do something like going public in their business. Nonprofits need them. at a certain level in certain states. The CPA firm I used to work for specialized in nonprofits, so they needed audits and reviews, and they also did the 990 tax returns for them. But for small businesses, generally not a thing that's really required unless they have to do some specialized application for something that could happen. But you could easily tap into a CPA to do that. Most of the CPAs that do audit and those type of financial certifications don't do tax.
So, as a small business owner, how do I make a decision? Who do I need? Am I supposed to be going to a bookkeeper? Do I go to a CPA? Do I go to an enrolled agent? How do I decide who can help me with my taxes?
Bookkeeper is going to be one department. Some CPAs, some EAs offer that within their service. The main thing is to have someone maintaining your books first and foremost. If that's your tax preparer and you're doing both, great. Sometimes it's a different function. Sometimes you can get a bookkeeper externally to do your books, get them ready so you can bring them to your tax preparer and have an easy, seamless tax preparation. But the books are the foundation of everything for the tax preparation, the tax planning, the strategy, growing as a business, first and foremost. As far as the actual tax preparation, you can get an EA, a CPA, you can get someone who has a different license structure as well. Just really their qualifications and ability to be able to handle the tax prep. But sometimes it's a separate function for tax prep, and especially in today's world as people are getting into more niche services, narrowing down what they're offering.
So, is there a particular thing that would help separate why somebody would want to choose to go with a CPA versus an enrolled agent or vice versa?
Really about asking them their expertise. So if you want to ask a CPA, hey, what do you do for businesses like mine? So let's say your service business, you're making $100,000 and you want to know what can you do for this type of business? What kind of planning can you offer? Those are the types of questions you want to ask your preparer if you're looking for more. If you're just looking for a tax preparation job, any license can provide that. To be honest, it's not the license, it's the experience. That's the main thing I'm getting at. Not to say the license is unimportant. You want to have someone ideally licensed in the industry, but it's really their experience. You need to go a little bit deeper and ask questions about what type of services they provide. Do they meet proactively throughout the year? Do they provide quarterly estimated taxes? Or are they just doing tax prep, punching you out like a mill and see you again next year? So you really want to ask those questions about how they run their business, if you're going to be a number, if you're going to be a partner.
I would imagine that there's a cost factor difference as well.
Yes, CPAs are going to be charging the most for sure. For most cases, their license is highly revered. They are higher level experts in certain capacities with that licensure that they have. So they will definitely charge a higher rate because of the status. It's like a doctor versus an NP to some degree. They're both very qualified. They both plenty of education, but you're going to obviously pay more for the doctor versus the NP. Although
they went to school longer, had to do so much more to get to where they are. So when a small business owner comes to you with their paperwork, walk us through what that's like and what you're looking for when they walk in the door.
The first thing is going to be back to that financials, the bookkeeping. It doesn't have to be this big, broad bookkeeping software. If it's a very small business, you can do it in Excel. I highly recommend anybody who has a business to use a bookkeeping software. That's the first and foremost. If you come to your tax preparer and you don't have your income and your expenses organized by category, software, travel, contractors, if you don't have those organized, there's no way we can prepare returns. So first thing is having that clean records, we'll call it. If it's not bookkeeping, it could be a spreadsheet, something that you can hand your accountant to be able to organize into a return and then start offering a little bit more follow up on the planning aspect as well.
So if somebody walks in the door with all of their bank statements and credit card statements for the past year, you would send them back to say, get this organized first and then come back and I'll help you?
Correct. At my firm years ago, I put a rule in place. If you have a business, LLC and up, then you need to have bookkeeping because that allows me as the accountant to go in there and see what is in there. Certain things could be misclassified. That could be deductions for you that could be added back in. And certain things could be being deducted that are not supposed to be. There's no way for me to really know if you just provide me a spreadsheet. So ideally having something like a QuickBooks, a Xero, Wave, whatever platform you decide to use, having that organized, the accountant can get access to it and then go through the transactions and make adjustments as needed and ask questions versus just giving some random numbers and having much to go with.
So if you've got a file, if it is a spreadsheet, but if it shows all the transactions and how they're classified, that gives you what you need because you can make the adjustments if you see something, they marked it as advertising that really shouldn't, that's an office expense, whatever, right?
Correct. And it also opens up other questions of, hey, we saw you did this 1 month, but you're missing the last 5 months of the year. Oops, I put it on my personal card by accident. Now we need to make an adjustment to add things back in. So it just gives that review process. It gives us more to work with. We want to help you maximize your year. We can't do it without data. Data is important.
What we're talking about is that there's a cost to disorganization.
There is.
And how have you seen that cost people?
The first question I ask clients that come in now, I definitely take a different advisory approach to it. First question is always, how much money have you made this year before and after expenses? You don't need to know that number by heart, but if you cannot get to that number and find it in your books or be able to pull reports, that's hurtful because I cannot tell you how much to put in retirement. I cannot tell you what deductions you want to do. I cannot tell you even what you owe in taxes. So people come and look for tax planning. I cannot provide any kind of tax planning without knowing the numbers. I can't tell you if you're going to be an S corp if I don't know how much income you're making. I can't tell you if you're going to do retirement if I don't know how much income you're making, how much salary you're paying yourself.
So are there deductions that are common that small business owners miss?
A lot of those are going to be their office expenses, certain things that don't get put into. Another thing I miss too is commingling. So they're not putting everything through their business account. And that's something I can't see if I don't see their books. So as soon as I open your books, I'm like, okay, looks like you're missing a bunch of transactions or you're commingling when you decompress that and detangle it. So the ones that I see that they miss are ones that they go their personals. Put something in their personal card and then forget about it later. It could be an office expense. It could be travel. Myself was just in scaling new heights and I have my Lyft on my personal credit card. So I booked a Lyft to and from the airport and I did not have it on a business card. So I had to remember to go there and take that expense and reimburse it from my business to my personal. The ordinary business owner is not going to know to do those things. So catching it in their books will help them to find deductions like that they're going to end up missing.
You use the word commingle. Talk about what that is.
So it's when you put business and personal in one account. You do not separate your business and personal expenses and income. So you want to have it separated so you can look through your business and see income expenses pertaining to your business only. And then same thing with your personal. And why that's important is if you go to your tax preparer and you have a bank account, it's just your personal, you don't have a business account. Let's just say everything's in one account. Now they got to go through your entire personal life and business life, and they're not going to know what's business, what's personal. So I've seen that people hand them like, hey, I give my guy my bank statements. They're just pulling stuff out of their hat, unfortunately. We have to do what we have to do to get a tax return prepared, but there's no way to possibly know unless that person goes through and tells us what is what. So a lot more transactions you have to go through. And if you have an LLC, you start going into the legal veil gets pierced that you're not able to protect yourself. If you're not having separate books, separate bank accounts, you're actually defaulting what that LLC does for you as well.
You said something interesting there. There are accountants or there are bookkeepers or enrolled agents that might take somebody's statements, and particularly if everything's showing up in their personal statements, that person hands it to them, they're willing to work through it, but that doesn't mean everything's getting caught because they don't know and nobody's double checking supermarket purchase that actually was something for the business, their food for a reception or something. That's not going to pop out because it looks like groceries, right?
Correct. They're going to miss things like that. They're going to miss travel expenses. They're going to miss subscriptions. You have a subscription for ChatGPT. Maybe you only use that for your business, but you just write it off as personal because you don't know what that is. So you're counting on them to make the decision for you.
Or they're into constant conversations and all that does is rack up money because you're using their time. And I imagine in most cases, they're billing on an hourly basis when they're working through somebody's statements, right?
Correct. Two things happen. Either you pay more money to clean it up, or if you don't, you still get a cheap job, you cannot rely on the accuracy of that work. There's no way someone putting together a $250 return when they have 50 pages of bank statements and scattered information all over. And often when I've reviewed the work of someone else later in that instance, they're like, I don't know where those numbers came from. They don't look right. And they know it's wrong, but they don't even know how to say what's wrong. So it takes a lot of unpacking to fix those things later.
I knew it was complicated, but now that you've described it this way, I can realize all the more reason somebody needs to take responsibility for their records so that things don't get lost. Because the downside is if they don't report something as a deduction, they're paying more taxes than they would have had to because there's nothing to reduce the income being paid.
It's very correct. And also, there's no way for them to stay ahead. I think it's easier if you get everything in order up front. That's why I started meeting people in the beginning and teaching them how to do their own books, because a lot of times you can manage your own books if you're taught correctly. And when I've done that with people, they become powerhouse business owners because they stay ahead. They know exactly how much tax they're paying. They know exactly how much margin they have, how much income they have, plan around it. I've taught people from 20 years old to 65 years old how to do their own books successfully, but it allows them to maximize their savings, stay ahead of their tax liabilities, and just not fall behind, because most business owners, their first year, find out a big bill they're not expecting. And that's been the biggest issue I've seen over and over.
Is the unexpected taxes that come after a good year.
Correct. And sometimes, yeah, you go about 2 years and you're not making that much. And then once you have a good year, you get hit with a big bill. Well, we started creating tools to be able to meet people before they get to that point to stay ahead of what they're needing to save. Because minimizing the tax liability is one thing, but also knowing what to owe is the biggest. If you don't know how much you're making, you have no idea how much you're going to owe. And nobody wants to find out in April they owe $15,000, $20,000.
And figure out where that money is going to come from rather than putting that aside. That leads us right into the whole issue of estimated payments. A lot of small business owners have no idea what that's about and what that looks like. Can you talk estimated payments from a simplistic viewpoint? What is it that small business owners are doing?
So what happens is if you owe $1,000 or more in a year, you have to pay quarterly estimated taxes. That's the general consensus there. So if you just have a business and know their income, for the simplicity of this, if you're owing over $1,000 each year, you're supposed to make quarterly estimated taxes. It's going to be April, June, September, and January. Those payments avoid you getting penalized for not doing so. So if you do not make estimated payments, they charge you a penalty. Right now, it's like 7% interest to that penalty. So they charge you pretty much interest on your taxes for not paying quarterly. So business owners need to at least pay the prior year 100%, usually 100% of prior year or 90% of the current year. Problem is narrowing out current year, because nobody knows what their income is, and you don't know that. Basing it on prior year is usually the safer bet.
I see. You would look at the previous year and what it looked like, and you would figure out what the estimated amount should be, and you make quarterly payments. Is that what you're saying?
That's correct. And we built a tool on BizTax Playbook that allows them to go in there and do that. Enter their tax return information from prior year, a couple inputs. It'll tell them exactly what the responsibilities are for federal and state for each quarter and the dates that are due, so they know what they have to go and pay in. And also we have a reminder system as well. For anybody's in our network, they get reminded every quarter to go and make that payment and the link of the tool.
And you're saying that the penalty for not doing that is as if you should have been making quarterly payments. The IRS will come back and look at how much you owed. And even if you paid it all by April 15th, you're still going to owe more money?
That is correct. You're still going to owe more. So I've seen penalties as low as a couple tens of dollars to as high as a couple $1,000s for people who earn a lot more money. So it's really just simply paying interest. It's almost like if you're buying a car, you pay it off now or you pay it off in a year, let's just say, you're going to pay 7% interest. It's not as aggressive as that, but it's pretty simple.
And this is another cost of disorganization, because if you're not able to take care of these kinds of things, I always say to people, there are some things you don't mess with. IRS, state agencies with sales tax, you just don't mess with them. And the electric company. There are some fundamental things you want to make sure they get paid when they're supposed to get paid, because it's only going to cost you more money. And the whole reason we're in business is to put money in our pocket rather than hand it to somebody else, right?
Exactly. And one thing I've found is that if you save for taxes as you go, you have money to do tax planning later. Without that, if you're living check to check on your business and not knowing where your income's at and don't have any tax savings to pay your bill, you can't use that money to save, because it takes money to save money. So if you walk into tax season and you have $20,000 saved and you owe $15,000, now you have an extra $5,000 to put in to reduce that $15,000 balance, or you can use the entire 20 to start offloading as much of that balance as possible. So I found people having that budget for taxes actually gives them the ability to do all the tax planning stuff that they want to do.
One of the things people think about when they hear IRS is audit. Are there things that will trigger for a small business? Are there things that will trigger an audit, or are there just some myths about it?
There's definitely things that will trigger it, and it's mainly for self-employed businesses. That's one of the highest audited type of individual who files is a self-employed business. Called a Schedule C on their personal 1040.
So what do you mean by self-employed? What are they looking at?
So if you have a 1099 and you earn income and you're not a business, or if you're a single member LLC and you file a self-employment tax return, a Schedule C, on your personal return, it's one of the highest audited categories by the IRS. And the reason being because they know those deductions are often frivolous more often than not. So they have a system to weigh your tax return against other people's tax return. And if you're off certain variables, they will pull you for an audit. Some of the things that they look for, whole numbers, 100,000 in income, 10,000 here, 5,000 there, 6,000 there expenses, all whole numbers. That's a flag. There's how often do you buy something with sales tax? Comes out to an even number across the board. Another thing being contractors is another area. 100% business deduction for your vehicle. So you're trying to say that I use my car 100% for business. That's a flag for them. And then other deductions, miscellaneous deductions that are not categorized. You just have other expenses and you put miscellaneous $20,000. That's a huge flag. So there's certain categories that they do look at and weigh them more than the others.
So the more that it looks like somebody's just rounding numbers or estimating numbers, it tells them that there aren't some legitimate books backing it up and they get more interested to dig in deeper. Is that what you're saying?
That's very correct. I've seen many of these in my days. Or showing extreme business losses is another big one. Your business is showing losses year over year, they will definitely pull you for an audit and challenge those losses.
Are there particular kinds of losses, or is just the fact that there's large numbers and they're not getting their taxes? So they want to make sure that there were actual receipts for those expenses. Is that what you're saying?
Yes, something like that. So let's say that I've seen a client in the past, they had a $100,000 W-2. And then every year they show a $50,000 loss on a business. They're writing off everything, car, they're writing off meals, travel. Meals and travel are also two big areas they watch. And they're showing losses, exorbitant losses every single year. Eventually they'll catch on and flag it, and then they'll flag every single year beyond that. So they might not catch it for 2 to 3 or 4 years. They send you a letter and all of a sudden you're getting a letter for 1, 2, 3, 4 years in a row. They want to undo those expenses or challenge them. So you have to be careful. Sometimes it feels like you get away with something for a year or two, but they're still watching.
And then the penalty is that now you can't get rid of them because they're paying attention to you, or you're on the list and they're always watching.
Yes, unfortunately.
That sounds scarier than an audit, being on their list and being on their radar.
And most audits are not full show up to your house or your place of business audits. They just send you a letter and they challenge something. If you can't prove it, they take it back and now you have to pay penalties and interest. That's 7% as it is currently standing on all that you owed. So if they walk back $15,000 in taxes you should have paid, you're going to end up paying, let's just call it $20,000, $22,000 with interest and penalties assessed. So you end up paying much more than what you originally paid.
Okay. So then there's a penalty on top of the penalty. It sounds like that would be painful to dig out of.
Yes, that person I was referring to had 3 and ongoing to 4 years, they were going to have to pay back about $15,000 a year. They were about to be down $60,000 that they did not have because that money was already spent. That refund money was gone. So I did my best to help them dig out of that and defend as much as they could, but it was not a good situation. You never want to see anybody in that situation.
Boy, you strike me as being empathetic. That would be painful to you as well because you're feeling what they're going through.
Yeah, and that's why I do my best to help. A lot of times I end up giving away a lot of free services to help people in those type of situations and just information because they're already in a bind. And is it self-inflicted to some degree? Yes, but they didn't know any better to some degree. Had they known this was going to be the output, I know they wouldn't pursue that avenue. So I do my best to try to help people in this situation.
It is a tough thing, and I appreciate people like you that will be out there. I try to do the same thing, is you get into business to be able to make money and to put it back in your pocket. But for the majority of small business owners, they don't want to be accountants or bookkeepers. And keeping track of your business monies is a little bit more complicated than keeping track of your personal monies. So it's like, I don't know what I don't know. And I'm still just trying to figure out how to get revenue into the business. So it's difficult for people to understand. You got to take some steps and spend some time getting your numbers organized and how to do that. So that's one of the areas that I focus on, is just trying to help small business owners before they're ready for a bookkeeper, before they're ready to do all that. How do you just organize and be able to know what your numbers are telling you? Because they tell a story.
It's very true. And you have that tax prep roadmap, is that what it's called?
Yes.
Yeah.
Yes. I sent you a copy. What did you think of it? I put together this PDF that people could use to organize their income and their expenses into a document that they could hand to a tax preparer. So if you received that document filled in from somebody, would that enable you to be able to do their taxes?
A whole lot, yes. You created a nice template for them to have something to work from and to work down. And as we trend more towards organizers and preparation, this is huge. Something I would provide my clients, similar to gather as much information as possible so that when you're preparing, you're not having to go back and forth asking a million questions. That is really good for them to get their stuff together and start to see what they need well in advance of tax season.
So much of it is just going down a checklist and thinking about these different things like, okay, this doesn't apply to me, this does. We've talked about that you've got some tools and resources and that you've moved to advisory, but I don't really know what that means. So what do you mean that you've moved to advisory rather than just being a tax guy?
So we switched from that reactive see you in tax season and tell you all the things you did wrong, almost like a report card. That used to pain me. I'm an empathetic person, so it used to pain me that tax season, I just see all the mistakes the clients would make all year and not reach out, not get proactive information. As much as I tell them I'm here and I would work tax 24/7, 365 days a year, I was doing taxes in my business. They still not reach out proactively, and then I'd have to clean up messes and tell them all the wrongs and things they missed out on. And giving people balances and saying, hey, you owe this, you owe that, and you got to become a therapist, their friend, their parent. Hey, you got to get this done. So you become all these functions in the middle of your busiest season when you're already drained. So we switched to a different model. And the model now just proactive. So now we partner with our clients and we enable them to be able to budget for taxes throughout the year, pay their quarterly taxes in real time. We do any kind of quarterly meeting that we can help, or anytime they need some throughout the year and they're changing payroll systems or hiring somebody, we're there as their partners to make sure it gets done and the best solution for them and guiding the hand all year. So really just advisory, just partnering with them a little bit more than see you every tax season, and now just being their go-to resource. So they would need to do something through you first, and you can make sure it gets done and make sure it's in the best for them and the best for everybody for the engagement.
Julian, you said something there that's just gold. It's the annual report card. That's an incredible way. And it's something we fear is that annual report card being the what's due to the IRS and reporting everything there. So that actually makes sense. So if somebody is coming to you and just starting out, they're disorganized, talk me through, how does it work with you? How do you help them?
So through my company, BizTax, the main company, we do packages to help business owners to get onto the systems. I have another business that does monthly subscriptions and it gears towards a little bit higher level of a business, but we still want to help other businesses. So we teach them how to fish, essentially what I call it. They go through a series of setups with their books, payroll if they need it, and they're teaching about budgeting for taxes, how to use our tools on our platform, and just getting them empowered from the beginning or cleaning them up to get empowered. So going forward, they stay ahead of the game. They know exactly what they need to do as they're doing it. But we also have an educational center on our platform as well. We give them to just empower them. We want to get them as knowledgeable as possible so one day they can afford to pay that subscription and be on our other business. So the only way to get them there is to help them beginning.
So is there any time that it's too soon to start working with you?
Yeah, you have to have a profitable business at that case. That's why we developed the BizTax Playbook, the online. That's a free resource center for business owners. We have a business owners hub on there now where they can go through a series of learning. There's an educational center with content we produce every week. There's resources we have. We're adding like tax rates, thresholds for anybody who wants to nerd out on the fun stuff. Some of them pay people. But then we also have tools there as well. So a business tax budgeter that allow them to budget for taxes every month in a couple prompts. A quarterly estimated tax safe harbor calculator, what I was discussing earlier. Accountable plan if they're an S Corp, and then a reminder system as well. So we have a bunch of different tools on there. There's about 20 something on there now. And it allows them to start learning about retirement, traditional IRAs, Roth IRAs, just a resource up for them to start understanding what's going on. And then as they scale and grow, and start working with advisors.
You say these tools are free. So how do they find them?
Yeah, it's called BizTax Playbook. Yeah, they can Google it, or they can type in BizTax Playbook, BizTax Playbook.com.
I will make sure that we include the link in the note of this video so that people can find that easily too. So how about another way to reach you? If they wanted to talk to you and say, hey, I saw this, just need to talk out where I'm at, how do they get in touch with you?
They can go to biztaxadvisory.net. That is my main mother company of all of this. That's where I have my consulting advising business. I do a lot of different packages, and then I do one-on-one tax planning and projections, and then I also do software architect as well. A fun new venture for me as well, helping other companies be able to develop tech and software and help them architect what they're trying to build and translate complicated logic into software. They need to reach out. That's my personal consulting business.
All right. And is there an email address or a phone number they could use?
Sure. So it's Julian, Julian, at biztaxadvisory.net. They could also find me on LinkedIn as well, Julian Joppy. They can look there.
Wonderful. Before we finish up here, is there any advice or any other points that you think it would be helpful to share with people?
Sure. One major thing I want to impress on people is just get ahead of the tax and finances. I see a lot of people that do versus the ones that don't. It makes a world of a difference. So the more ahead you are, is the better you're going to be in business. If you fall behind on taxes, that's how businesses go out of business. They get frustrated and go back and getting a job because you get behind one year and then you're just behind. And it's just never, it snowballs and never becomes the business it could have been. It's such a great business to see a lot of them go out and you hate to see it. So getting ahead of this thing is just really important. Knowing your numbers is really important because you cannot make business decisions without doing so. When I made a pivot into advisory, I had to look at my data, which unfortunately was not the way I do things now. I had to look at my data and see what was the service that I could offer based on the clientele we were serving, the revenue we were bringing in, and to take that information and turn it into a package. I couldn't do that until I had the books in order. So I had to go back and redo my books for the entire year. It's really powerful stuff. I really don't focus just on taxes and books anymore. It's more about empowering business owners to take charge of their businesses, their finances, their taxes, everything. And I really want other business owners to succeed. I've seen a lot of great things from people who get ahead of the curve. So that's my tip to people.
Well, Julian, I find you to be an anomaly. You have to be a certain kind of person to be able to work in the world of IRS and tax. And for you to be personable and relatable and care so passionately about small businesses and what's happening to them, I applaud that what you're doing, and I'm rooting for you because we need to help more small businesses succeed because they're the backbone of this country. So thank you for taking the time to talk with us and help us understand the world of tax a little bit better for small businesses.
No problem at all. Thank you for having me. I look forward to next time.
What Julian said about the annual report card, well, that image is going to stay with me for a while because that's exactly what tax season feels like for so many small business owners. But it doesn't have to. If today's conversation gave you anything, I hope it's this. Getting organized before you hand things to a tax pro isn't just good practice. It saves you real money. Julian's free resource hub is at BizTaxPlaybook.com, and the link is in the description. And if you want to start getting your own numbers organized before you ever walk into a tax pro's office, my tax prep roadmap is also linked below. In the meantime, be sure to shield your profits, and I'll see you next Monday.